That's the date every single Palantir investor needs to have circled on their calendar right now. Because in just a few days, Palantir is going to step up to the mic and either justify everything the bulls have believed about this company, or hand the bears the ammunition they've been waiting for. And here's what gets me. Most people watching this stock right now are looking at it completely wrong. They're watching the headlines. They're watching the drama around Alex Karp. They're listening to all this noise about AI eating Palantir's lunch. They're not watching the chart. And the chart? The chart is telling you something very specific right now, something patient, something most retail investors are way too distracted to see. Today, that's exactly what we're getting into. I'm walking you through the full picture, what the chart is signaling, where the key price levels are, what analyst targets actually say, what this earnings report needs to deliver, and whether this is a moment to buy, hold, or step back. No hype, no noise, just the data and the levels. Before we dive in, if you're serious about staying ahead of earnings season, hit that subscribe button right now. We drop this kind of analysis every single week and you do not want to miss what's coming next. All right, let's get into it. Let's start with the chart. Because if you want to understand where Palantir is going, you need to understand where it's been. 1 year ago, Palantir was trading in the $20 range, not a household name, not a top-of-mind stock for most retail investors. Then something shifted. The government AI narrative exploded. The AIP platform started getting real traction. Earnings after earnings, Palantir beat, and the stock ran hard. By late 2024, we were looking at Palantir trading above $80, $100, then pushing toward $120, $130. And then in the early weeks of 2025, it went parabolic, $150, $180, $200. And I said it clearly when it was up at $200. This was not sustainable at that stage of Palantir's business cycle. Something that goes up 400% in less than a year does not just keep going forever. So the pullback happened. And here's the thing. It was supposed to happen. Right now, Palantir is trading in a consolidation range, and the chart is being very clear about the boundaries. Support, $128 to $130. That is your floor. Every single time this stock has dipped into that zone over the past several weeks, buyers have stepped in. Institutions are not letting Palantir fall through that level. That's not noise. That's conviction money. Now, what about the ceiling? In the short term, the ceiling has been sitting in the $155 to $165 range. That's where sellers have been active. That's where the stock runs into resistance on every single bounce. So right now you've got roughly a $30 range where this stock is just chopping sideways. And that is completely normal for a stock that had the kind of run Palantir had. Think of it this way. Palantir ran from $20 to over $200. Now it's consolidating around $130 to $140. That's not a breakdown. That's digestion. Here's what's interesting about this range. Look at the volume patterns. On the dips toward 128, 129, 130, volume spikes. Buyers are not passive. They're stepping in aggressively. On the pops toward 155, 160, volume fades. Sellers are distributing into strength. That pattern tells you something very specific. It tells you this range is being defended. The stock isn't falling apart. It's being accumulated. And institutions? They haven't left. Institutional ownership in Palantir has actually been trending upward over the past 2 quarters. These aren't retail traders flipping for a quick gain. These are funds with billion-dollar mandates buying at these levels. That's a data point that matters a whole lot more than someone's hot take on X. Now let's talk about analyst price targets, because this is where Palantir gets genuinely interesting and genuinely complicated. Here's the honest reality. Analysts have never quite caught up to Palantir. When the stock was at $80, consensus targets were clustered around $60 to $75. When it hit $150, targets were around $100 to $120. This stock has consistently outrun the analyst community. So what are they saying right now? The range is wide. On the low end, you've got bear case targets down around $60 to $70. These are the analysts who believe the valuation is fundamentally broken and that AI commoditization will pressure Palantir's pricing power over time. On the high end, and this is where it gets interesting, you've got price targets running up to $215, $230, even higher from the most bullish desks. The median consensus right now sits somewhere in the $120 to $140 range, which means at current prices, the average analyst is essentially calling this a hold. But here's what I always tell people. Watch what analysts do with their targets after earnings. That's where the real signal lives. If you're a bull on Palantir, and I want to be clear, I'm presenting both sides so you can think for yourself, the bull case on price goes something like this. Palantir is currently trading around $130 to $140. The highest 12-month price targets sit at $215 to $230. That's roughly 55% to 65% upside from current levels if the most bullish analysts are right. Now take that out 3 to 5 years. If Palantir continues compounding revenue at 25% to 30% annually, maintains its Rule of 40 score above 80, which is exceptional for any software company, and keeps expanding its commercial customer base, the case for a $250 to $300 stock in 5 years is not crazy. That would be roughly 2x from here, not the 10x we saw before. But 2x over 5 years on a quality company with government-level moats is still a very compelling return. Now the bear case. The bear case is essentially this. Palantir's valuation requires perfection. You're paying a price-to-sales multiple that would make most value investors physically uncomfortable. At current prices, Palantir is priced like it's going to dominate the entire enterprise AI space for the next decade. And if they miss, if they stumble on commercial growth, if a big government contract gets delayed, if something breaks in the narrative, you could see this stock back at $80, $70, even lower. The bear case for $60 exists. I think it requires a lot of bad things to happen simultaneously, but it's not zero. Here's where I land personally. I look at those two scenarios, and I see an asymmetric opportunity, but only if you have a time horizon of at least 3 years. Trading Palantir quarter to quarter is a recipe for stress and bad decisions. Owning Palantir for the next 5 years? That's a different conversation entirely. Quick favor. If this analysis is hitting differently than what you normally see on Palantir, smash that like button. It tells me to keep making this kind of content for you. Let's set the context first. The last earnings report came out on February 3rd. Palantir beat on earnings per share, beat on revenue. The numbers were solid. And here's the thing that should tell you something about this stock. The market basically shrugged. The stock got a brief pop after the report, then faded right back into the consolidation range. Why? Because the market has become somewhat conditioned to Palantir beating. Beating isn't enough anymore. The question every earnings report now is, by how much, and is the guidance credible? That's the standard Palantir now has to clear. So what does this earnings report need to show for the stock to break out of this range? Let me walk you through the 4 things I'll be watching most closely. Number 1, U.S. commercial revenue growth. This is the growth engine that has gotten bulls most excited about Palantir's future beyond government contracts. If U.S. commercial revenue growth continues accelerating, we're talking 40% year over year or better. That's a signal the AIP platform is genuinely hitting escape velocity in the private sector. If that number slows down meaningfully, that's going to cause a problem for the stock. Number 2, customer count. Palantir has been adding customers at a strong clip. More importantly, the net revenue retention rate, how much existing customers are spending compared to last year, has been staying strong. If both of those metrics continue moving in the right direction, that's confirmation the product is sticky. Once companies integrate Palantir's platform, they don't leave. Earnings needs to keep confirming that story. Number 3, full year 2025 guidance. This is actually the number I care about more than the quarterly beat. Management raised guidance last quarter. The question is, do they raise it again? Do they maintain it confidently? Or, and this is the scenario that would hurt, do they get cautious? Any sign of guidance conservatism will be immediately punished by the market. That's just the reality of owning a high multiple stock. Number 4, government contract commentary. In the past few weeks, Palantir announced a $10 billion Army Enterprise Agreement, a $300 million USDA contract. The pipeline looks full. But investors are going to want to hear management articulate exactly how those contracts flow through into recognized revenue. They'll want to hear about the DOGE environment, whether government spending rationalization is a headwind or counterintuitively an opportunity for Palantir's efficiency tools. Now let's talk about what the stock actually does on earnings day. I'm going to lay out 3 scenarios based on the chart and the current market positioning. Scenario 1, beats and raises. Palantir beats on both earnings and revenue, raises full-year guidance meaningfully, and management commentary on commercial growth is confident. In this scenario, you're looking at the stock attempting to break out of that $155 to $165 resistance zone. If that breaks with volume, next target is $180, then the prior high around 215s, This is the scenario bulls are positioned for. Scenario 2, beats but maintains. Palantir beats, but guidance is maintained rather than raised. Management talks cautiously about macro uncertainty. Stock likely gets a modest pop, then fades. You stay in the consolidation range. $130 to $155 remains the battlefield. This is probably the most likely outcome based on current positioning. Scenario 3, disappoints. Revenue miss, or guidance cut, or weak commercial growth commentary. This is the scenario where that $128 to $130 support level gets tested hard. If that breaks, the next meaningful support is around $100 to $105. Not a crash, but a painful drawdown for anyone who bought in the $140 to $160 range. I'm not telling you which scenario is most likely because I genuinely don't have a crystal ball. What I'm telling you is the chart gives you a clear roadmap. Watch $128 on the downside and $165 on the upside. Those are your key levels going into and coming out of earnings. All right, halfway through. If you're finding this useful, leave a comment below. I want to know, are you adding to your Palantir position before earnings, holding what you have, or sitting on the sidelines? Drop it in the comments right now. I want to spend a few minutes stepping back from the chart, because charts tell you price, but they don't tell you why the business deserves that price. Palantir's structural advantage comes down to three things. First, they're not a model company. They're a platform company. All the noise about Anthropic or OpenAI eating Palantir's lunch fundamentally misunderstands what Palantir actually does. Anthropic makes large language models. Palantir operates the layer above those models, the platform that connects AI capabilities to real-world enterprise decisions. Stronger AI models actually strengthen Palantir's value proposition. They don't replace it. Second, switching costs are extreme. Once a company or a government agency fully integrates Palantir's Gotham or Foundry or AIP platform, the cost and complexity of ripping it out is enormous. Palantir doesn't lose customers. Their net revenue retention numbers prove that. Existing customers don't just stay, they spend more over time. Third, the government moat. You cannot easily replicate what Palantir has inside the US government and defense establishment. They're already there. They're already cleared. They're already operational. The idea that a competitor is going to quickly displace Palantir from the Pentagon's enterprise AI infrastructure is just not realistic on any short-term timeline. Now, here's my honest concern about the business. Not about competition. Not about AI. My concern is execution at scale on the commercial side. Commercial growth has been impressive. But can Palantir replicate the sticky, high renewal rate dynamic they have in government as they expand more broadly into enterprise commercial clients? That's the question I want to see answered over the next 6 to 8 quarters. So far, the trend is positive. But this is the variable I'm watching most carefully as a long-term consideration. Let me bring everything together. The chart is telling you Palantir is in a defined consolidation range. $128 to $130 is your floor. $155 to $165 is your ceiling. The stock is coiling before earnings, and that coil has to resolve one way or the other. Analyst targets range from the low 60s in the bear case to the low 230s in the bull case. The bulls aren't wrong based on the trajectory of the business. The bears aren't wrong about the valuation risk. Both arguments have validity. Where you land on that debate determines whether Palantir belongs in your portfolio. The May 4th earnings report is the next major catalyst. Watch 4 things: U.S. commercial revenue growth, customer count and net revenue retention, full-year guidance, and management commentary on government contract conversion. Those 4 data points will tell you everything you need to know about whether the bull thesis is still intact. Here's my personal take. Palantir at $130 to $140 is not screaming cheap. You are paying a premium for what is genuinely a premium business. But premium businesses often deserve premium prices. I think the floor at $128 to $130 holds unless earnings are materially disappointing. I think there's a credible path to $180 to $215 over the next 12 months if execution continues. And I think for someone with a genuine 5-year horizon, current prices are more interesting than the narrative of fear around this stock would suggest. But I want to be very clear. This is not a call to bet everything before an earnings report. Earnings are binary events. If you're adding here, add a position you can hold through volatility. Don't bet what you can't afford to lose. Here's the thing about investing that I keep coming back to. Price is what you pay. Value is what you get. The investors who built real wealth on Palantir didn't do it by timing the earnings perfectly. They did it by understanding the business, buying at a price that made sense for their risk tolerance, and holding while everyone else panicked. That discipline, that patience, is what separates real investors from people just reacting to headlines. Know your thesis. Know your levels. Know what would change your mind. Then stick to your plan. All right, that's the full Palantir earnings deep dive. Before you go, 3 things. 1. If this gave you a clearer picture going into May 4th, smash the like button. It takes you 2 seconds and it genuinely helps this channel reach more serious investors. 2. Subscribe and hit the bell. We're going to cover the Palantir earnings reaction the moment the numbers drop. You do not want to be the last one to see that analysis. 3. Drop a comment right now. Are you bullish or bearish on Palantir heading into earnings? And what price level are you watching most closely? I read every single comment. Thanks for watching. I'll see you in the next one.